business, your wealth, live stream with our absolutely esteemed colleague, your friend, the person you tune in for, not the guy that's sitting in front of my microphone, but the guy that's sitting in front of his, Cory Shepard.
Yeah. Our colleague. I like that.
Well, here's the thing. We're all in this work together to build strong balance sheets, have a great life, all of that. So we are our clients' colleagues in this.
I can appreciate that.
I was going to say, like, it's difficult. It's confusing. There's so much information out there. So few places to get good information. And, you know, I think this podcast is one of those places that at least has people begin to think about money, which brings us to our topic today.
Oh, and by the way, happy 2021. Just got to throw that.
Oh, yeah. This is our first
of the year.
Mm-hmm. Yep. Now, I didn't want to tell everybody, but we're going to do the first 24-hour financial live stream.
Stop right there.
No, starting now. Starting now, Cory. Okay, I didn't tell you ahead of time. We're just going to keep going. Jordan's cleared his calendar. So for everybody that Jordan normally works with, he's calling in sick today. Don't tell.
Actually, we don't even have to clear our calendars. Every client that we meet with today is just going to find out you're part of the live stream.
You can cancel if you want. Wouldn't that be something? There's a client watching right now, probably texting me like, "We're not really going to be live, are we?" And if they do, I'm going to text them back and go, "I'll let you know." Well, today's topic is kind of fun. We're going to be talking about gold. And there's been this recent run-up in gold. There's obvious talks of other sort of hard currencies like cryptocurrencies. But kind of what I want to start this episode off with is to show you guys this is about 4.5, 5 ounces of gold. This was actually collected and mined by me and my father when I was a kid. And my father passed away near the end of 2017. But one of the things the man always said to me was, gold is the best place you can put your money. Gold is the greatest investment. Gold is real money. You know, and my dad was born in 1929. He was 50 years old when I was born. So what my father told me might be the same thing that your grandparents told you, was that gold is one of the best places to put money.
Trying to remember. Hold on, I'm gonna check my grandpa's birth date. 1 second. It's back here on the wall.
Look at how trim Cory is, everybody. He's got something framed on his wall back there. Important enough to frame, but not important enough for him to remember.
1933. If you just made a joke about my grandpa, you're gonna regret it.
No, I said simply, his grandfather's birth date's important enough to frame on the wall, not enough to remember. What was the date again?
1933 was when he was born. So they were compatriots. So this is my grandfather's life insurance policy framed on the wall behind me. He passed away, and I was helping my mom with all of his effects and financials, and realized that he was the age when he got that life insurance policy. He was as old as I was when he died.
Oh my gosh.
Kind of special connection. Yeah.
Wow. Well, thank you as always for taking my not quite totally inappropriate joke and following it with a sincere story that makes my joke totally inappropriate. The other joke that I told while you were there is I was like, hey, look how trim Cory's getting, man. He looks good back there. The full body shot. I mean, back turn to the camera.
Special camera that subtracts 10 pounds. I still feel a little over the edge from the holidays. I'll admit that.
Well, you know what? One thing before we get into the gold that I think is important to talk about is, like, you know how when you start lifting weights a bunch, your pants get kind of tight in the thighs as those big muscles start to get larger. Mine are pretty tight, but it's because I'm getting fat. I've really focused on that in 2020, gained some serious poundage. I think I might carry it through 2021. Part of my New Year's resolutions, just nothing but biscuits and gravy 24/7.
they're like, oh, it's all about the gains, bro.
Dude,
so
I can make some gains with some biscuits and gravy. All right. So for those of you listening, we are talking gold, and a little fun to get everybody on the live stream. But why is this gold so valuable? Why is it important? Why do people look at it as a hedge against inflation? Those are all questions for you, Cory.
Well, gold has that tangibility. I'm reading a book called Debt that talks about the human history of money and credit and markets and interactions. And gold was super useful as coinage back in the day because it was really portable and it was scarce. So it was valuable. It was hard to get. You had to dig it out of the ground.
Well, you remember the pirates would bite it to see if it was real because you could dent gold with your teeth.
So incidentally, gold coins largely sprouted up around war and armies because soldiers needed a highly portable way to get paid. And so gold coins made it really easy for these kingdoms to pay their soldiers. And so all of that deep human history has filtered up through the years and our dollar used to be attached to a standard of value that was pegged to gold, called the gold standard. That now we're off of that, but we still have this sense that gold, it's shiny, it's beautiful, it's scarce, it has some intrinsic value. But unless you're designing, I don't know, some kind of particular electronics that the properties of gold are useful, it really only has the value that we say that it has, because everyone else thinks that shares that interpretation.
Well, and I'll show you how I think compelling gold can be as an emotional tool. So see this little box, Cory? This box is the same box with this little foam liner inside of it that my dad built. For my entire life is where he's kept his gold. At different times, this was in a file box. It's in a safe now for me. But I just found something else in here that my mom will be mortified that I brought this up on the live stream.
But why do you have a live stream show if other than for a chance to mortify your mom on occasion?
On occasion, at least. So this is an actual tooth of my mom's. I'm not sure why this made it in the box. Like, look at the roots on that thing. But it actually had a gold crown. So there's a gold crown. So, Mom, if you're watching, Dad saved that. I've got it in the box in my safe. Let me get this put back in here. I thought about pouring some of this gold out on my hand, but with the price of gold right now, I didn't think I could afford to have some of it stick to the sweat.
It's an expensive sneeze. Yeah.
Oh, my gosh. Could you imagine? It's like a $2,000 sneeze. So current price of gold right now, and we could look at the screen here if we want, Jordan. We've got current price January 5th, $1,941. Now, when my dad was preaching this stuff to me as a kid, it was like he was back here in like the 80s. Like, I mean, look at that. Like, gold was $4.28 an ounce. Gold was $5.60 an ounce. Like, I remember these bumps in gold when my dad and we would do gold panning. That was the type of placer mining that we did. And placer, I guess, is this kind of gold. So it's gold pans, sluice boxes, etc.
They just named that after Placer County, Placerville, California.
I'm pretty sure Placerville, California got the name from this type of mining.
Okay. The other way around.
Yep. So, but when we look, we can see that, like, oh my gosh, look at this. Like, we'll take a moment here and play with the idea of let's say back in 1982, good long-term strategy. That's almost 40 years. I did that right, didn't I, in my head? So let's say we got at this low price in 1982 of $3.20 an ounce. And then we're going to carry it through to today. Let's see, 82 to mid 2000 is 39 years, Cory. Did I do that right?
Sounds about right. It's close enough for me.
Okay, so we're just going to do a quick efficiency calculator. Let's see what that grew to. So we had $338 Future asset value today is 1941. Now, we're not even talking about some of the problems that exist with gold. For instance, it's not very easy to buy or sell at spot. That's the price of gold per ounce. You always have a dealer, somebody that's taking something every time that gold changes hands.
Right. Also, we'll talk about taxes in a minute. They're not great.
So we have a 4.58% return. Now, Cory, what is it people say about gold? It's a good what kind of hedge?
Inflation kind of hedge.
Mm-hmm. And its growth for the last 39 years has been a little bit better than inflation.
So we could say that's not wrong.
It's not wrong. I think it is very true that it is an inflation hedge. But we just have to take a minute to figure out how useful is having an inflation hedge. Now, I will say that one of the things that comes up most often is like, what if our world economic banking system ends? You know, I'm one of those people, we've talked about it before, that I'm an apocalyptimist. I'm pretty sure everything's going to go bad at one point, but that's when I'm going to thrive. So I have the food
I'll be ready,
and the water.
Is what the apocalyptimist says.
Yeah, and I hope it shows up soon. Well, I remember at the beginning of COVID, people were running out to the stores and doing all, and the people were like, "Oh, Paul, what are you doing?" I was like, "Nothing different." We got like a whole shelf full of food in the garage that wasn't that expensive to get. It's not very difficult to maintain, and a bunch of water in the garage. I was like, we'll be okay. That's the part that I think is most attractive about gold. Is this could be it. Now, by the way, it doesn't matter when we are. There's always somebody saying this could be it. This could be the time that your fortunes are lost. This is the time that it could cost you everything. This is the time the government has printed more money than ever, and therefore, gold is going to go through the roof, or Bitcoin is going to go through the roof, or you name some other commodity, oil, etc. Each of these are a commodity in which people transact.
Tulip bulbs.
Tulips, yes. Well, and that speaks to it is like, at least with a tulip, you had some utility. For instance, you could put it in the ground and grow a tulip. Mm-hmm. Now, you may have significantly overpaid for it. You bought it as a commodity. Cory, do you want to spool them up? Anybody that's not familiar with the tulip?
Yeah,
deal.
Just look up the tulip bulbs, Holland. Oh, gosh, now I'm gonna. I can't remember if it's like 1100s or 1600s, something like that. And
I'm gonna look it up.
The price of a tulip bulb went from what you would expect
1600s
to buy a tulip bulb for these days, like some pocket change, to the price of a 2-bedroom townhouse in just a few years.
Mm-hmm.
Like the equivalent of it. So one tulip bulb could buy you a townhouse for so crazy. And it was just all about market supply and demand. Now, gold, there is a benefit of gold. This is another one. You plant some gold in the ground, come back in a year, and you know what you got? Some gold.
Like, it doesn't degrade.
That is valuable. It doesn't degrade. So
that's right.
There is some utility there.
Yeah, it has sustainability, but the idea of like, I have gold, I can't eat it. I can't, I may be able to transact with it, but for those of you that are buying gold coins, I want you to think about this for a moment. Let's say you have a 2-ounce gold coin right now. That 2-ounce gold coin's worth a little under $4,000 today. Let's say the entire financial system of the United States collapses, such that gold becomes a favored transacting tool. If that were to happen, what do you think price of gold is per ounce the day that happens? It ain't going down. It would go way up, right? So your 2-ounce gold coin, what do you need to do? Buy a limousine? A Bugatti Veyron?
Right.
A house? Like, that's not for the sake of transacting, it's a terrible transaction tool if it became our primary tool and enormously valuable. Or as I've said to people, if you are saving up gold for the sake of saving your portfolio in the long run as your inflation hedge, you may get some good returns out of it periodically. but you would also go through tremendous periods of time with no returns. So I'll take that to our chart here, Cory.
Yeah.
So you could have owned gold as a commodity, even if you bought that low price in 1982. And then just let me kind of roll forward here. And let's see when we get back to that 338 an ounce. There we go, right about here. So that took until 2002. So like 20 years. 20 years of no return in this asset that our grandparents told us would be the best possible asset to own. Not so much. Now you might, if for instance, you could have an academically allocated, globally diversified portfolio that also had spot gold in it, like some ETF, something that reflects the spot price of gold for you and your portfolio. You would have probably had some gains because you would have rebalanced against this. So this goes back to why we want academically allocated, globally diversified portfolios. Because even in this 20 years, you would have been, when it was down further, you would have rebalanced to gold. When it went up, you would have rebalanced out of gold and bought more equities. So you would have had some better returns because you would have been balancing in and out of gold. But
let's remember, oh, sorry, you finish your thought.
Well, I was going to say, like, let's say somebody said, hey, this is a fixed income asset that you should buy. It does 4.5% over a 20-year period. Oh, but it's not liquid. There's some bad tax consequences Cory's going to talk about in a second. It's not heavily liquid, and it's this kind of volatility. Nobody would pick that as their fixed income or bond-like asset in their portfolio. So you get all of the volatility of equities with none of the benefits of fixed income.
Well, and so let's not forget that an inflation hedge, the reason people need to hedge against inflation is because they need to buy stuff with their money, and inflation makes that money worth less value over time. So the assumption here is that you're not just letting that all sit that whole time. There's some amount of money you need to spend. So just for instance, if someone had $100,000 in 1982 and they put that all in gold to hedge against inflation, they're going to need to take some money out of that over time. And there was some fluctuation in that value. So it didn't do perfectly for them as an inflation hedge. I think, now we're not recommending this. This is not our secret sauce. We've never told a client to do this, but they took that $100,000 and just put half of it in cash and half of it in a diversified portfolio. They probably do better than the net result of gold over that 20-year period.
Well, and in all the times that gold has acted as a quote-unquote inflation hedge, what else tends to go up with inflation? Oh, equities and real estate. Like, wait a second. Like, those all go up also. Like, could those companies have a difficult time? Yeah. Mm-hmm. But the share price of those stocks also goes up as inflation goes up. Not all stocks, because each individual equity has its own, Tesla, if they make a big mistake in the marketplace, it will be affected because of its own decisions, not just inflation overall, but an academically allocated, globally diversified portfolio will pick up some of those attributes of equity prices increasing, just like the cost of everything increases in an inflationary environment. Not just gold. Now
if we talk about taxes?
Almost. I've got to say, the one thing that I do love most is that if you are buying gold because you think the world is going to fall apart, you may want to consider investing in both brass and lead. And I was going to demonstrate one of the delivery systems for the brass and lead. Cory said I wasn't allowed to do it on a live stream, said YouTube would take us down, Facebook would censor us, and as a result, you guys don't get to see one of those brass and lead delivery systems. But if it really goes all that bad, like economic markets break down, the police can't be paid, the fire department can't be paid, you've got issues that are far beyond your ability to transact with gold. And it's a little bit, I don't know, this is an inappropriate joke. I'll tell it anyway, since I almost told it. Have you guys ever seen the meme of like the enormously obese prepper? He's got like a bandolero of ammunition, a bunch of food behind him, an AR-15, and it's like prepped for the world ending, but has a difficult time climbing a flight of stairs. That is sometimes what I feel like when people go, man, it could all end. I need to have a lot of money in gold, but they don't even have the basic components of planning for their financial independence, becoming independent from the work that they have to do. They're worried about the oppression that could exist for them and their family should the world fall apart, which I can certainly appreciate. But that is the 0.00000, 1 likelihood that the world falls apart and our economic system goes away, all of that. The statistic that's 99.99 some high percent likely is you will get too old one day to be able to provide an income by transacting the marketplace via a job or a business. It's normal. Everybody eventually gets aged out of the marketplace. And while they're planning for this incredibly small likelihood of this outcome, this incredibly small likelihood that the world falls apart, meanwhile not planning for the incredibly high likelihood that they're going to live in old age, and if they don't take care of their balance sheet, the very family they were looking to protect, they will be living with. Okay, Cory, on that light note, let's talk taxation.
Well, and
it's
also
king of the segue over here.
We'll come back to, I think, Paul, I haven't talked to you about this, but my reading about the history of economies and currencies, we're going to have to do an episode on that because, it wasn't just a barter economy before we had coins. It was a credit economy. It was like communities taking care of each other. And they, at most times in human history, they didn't even keep a ledger because it's just like you're in this tiny town of 50, 100 people and someone needs something, you're going to help them out because, they're going to help you out later. Like humanity comes back to those kind of economies, even when everything goes to crap. So I don't need to invest in brass and lead. I just need to invest in friends who've invested in brass and lead and be really valuable for them.
I can't tell you how often I hear that, Cory.
Right. I know. But you see, you're no good to me right now. You're thousands of miles away. So I've got to find my people out here.
Good luck in Chicago.
So taxes. Gold has a disadvantage over things like equities and real estate because you don't get the benefit of capital gains. The taxation of gold is income taxation wherever you sell it. Now, maybe, the IRS is probably listening because we're really getting our viewership growing. Gold might be easier to sell without officially having a record of it. So you can make whatever choices you want around that. But
if you're transacting in large enough sums, like you need to offload $50,000 worth of gold, that will get reported.
That will get hard
unless you're dealing with somebody that's irreputable. And do you really want to be like, hey, I'll bring you $50,000 worth of this precious metal in return for you having a knapsack full of cash?
No.
Nope, not the deal I'm signing up for.
And that commission to a dealer, what, 3 to 5% of the value, probably, something like that. Because they need to make their money on your side and have enough margin to sell it again on the other side.
Here's one of the biggest things. I bet most people listening who have gold or have bought gold or have thought about buying gold, I would bet you dimes to donuts, and I would love it if somebody chatted in, did you look at what it's going to cost you to sell it? Do you know what you would receive at 1943 if you went down to the local jewelry store that would pay for it or the rare coin place that would pay for it? Like, go down there and say, hey, with spot price of gold, if I brought you in this many Cougarans that are 24-ounce gold, what would you pay me for them? And learn what the difference is so you know what it's going to cost you to exit the vehicle you got into. People aren't thinking about that. Now, this might be a good time, maybe topping off this episode, if you're okay with it, Cory.
Yep.
Just a little bit on the cryptocurrencies now that they've gone so much through the roof.
Because it's like the gold that our grandpa would have talked about if it would have been around at that point.
Of course, yes, because it's gone unbelievably through the roof since its inception in the early 2000s. So Why is that? Well, it has attributes similar to gold. There is a limited amount. Now, unlike with gold, we don't exactly know where the limit is because it's all inside the earth. Elon Musk has talked about mining asteroids and bringing $1 trillion worth of gold back to earth. That may happen, which incidentally
would kill the price of your gold if that happened.
I was just thinking the same thing. But all that to say, it's limited. We don't know how much gold is limited. And it takes effort to extract. So those contribute to gold's value. Well, similarly, things like Bitcoin and Ethereum, and I won't speak for any other cryptocurrencies, also have a limited amount. And based on how the algorithm works, it gets sufficiently more difficult to mine that value. The only difference is, for those of you not familiar with cryptocurrencies, it's computers closing out complex equations on something called the blockchain, which we're not going to go into today. But it's those things, it's scarcity and demand that drives the value. Now, I'm not one to say people shouldn't have any gold. For instance, I have some. Instead, it's not meant to be an investing strategy. It's meant to be a commodity that we would hold. Maybe like you might hold if you were some kind of major investor, or other commodities. People like Southwest Airlines years ago bought a bunch of options on oil that kept their fuel costs lower than every other competitor for like half a decade as a result of them seeing a future in commodities, and they were effectively insuring against increased prices. With gold, all you're doing is maybe flagging some value of the dollar. If 35% of the world's or the US's wealth just got printed in these trillions of dollars of relief packages, well, then if it's a straight line comparison, gold should go up 30%. But it's not, because what affects gold is what affects any individual commodity or stock. Right. News. New things we don't know today will affect that price. And those things are outside of our control. So if we're going to be in gold, well, I'm a fan. We run into clients all the time, have a little bit of cryptocurrency, have a little bit of gold somewhere. We don't tell them run out and sell it. We simply say make it an appropriate part of your portfolio, maybe for emergencies, maybe for some other problem. But if you want to, put $10 or $20 or $30,000 in as appropriate for you at your level of financial wherewithal. But if what you think is, I'm going to have a little bit of money I'm going to put into cryptocurrency or gold, which cryptocurrency certainly feels much more accessible to people than gold. Because if you have $500, you can go get some cryptocurrency. $500 isn't going to get you much gold. And so people are getting a chance to participate in what this marketplace that feels perhaps like it felt to my father having gold. But in reality, what we're doing is we're acquiring a commodity. And that commodity has totally variant values that we cannot predict. Like, who would have predicted that gold would have a 0% rate of return for 20 years? Nobody. Certainly not the people selling you the gold. Could cryptocurrency continue to go to the moon? Sure. But should you take a significant part of your net worth and put it in any individual security or commodity hoping that the future works out? No. And it might. Like, there are people who have made tons of money on Bitcoin. There are tons of people who've made a lot of money in some of these other tools. Now, you don't see that in gold, but I think it's largely because it's both. Like, think about what you mentioned earlier, Cory, about the value of gold, you know, back in medieval times and kings and queens, right, and how they would pay the armies, because it wasn't, you know, you could pay a whole army with a little chest full of gold. You didn't need to, you know, have a caravan of grain to pay all of your people. Right. The same way, Bitcoin, Ethereum are all lighter and easier to transport than gold, and may become more valuable. We're all for you guys participating in that, whether it's gold or cryptocurrency or whatever. We don't recommend it. But if you have it, this isn't a call to go out and get rid of it. Right. Just stop making it your primary strategy. All of us, we're in this together. We're all working toward financial independence. If what you can do is focus that time, energy, and resource on the idea that what does it take to have a satisfied life? What is a good life to us? How much money is enough? Those questions will pay far more dividends than any individual commodity we own. Yeah. And we allow things to distract us, whether it's the gold commercial or our favorite radio host bringing it up, that it is going to fall apart in every financial tool. That's all gold ends up being when it's marketed to you, is just a different financial tool. And what you have the ability to do is instead gird your balance sheet, set aside a lot of money, make sure, like Cory's grandfather, you have your life insurance in place to make sure that you have a lasting legacy. Gold by itself won't deliver your future. Bitcoin by itself won't deliver you to your future. The only one who will deliver to your future is you. Now, with that, Cory, I think we've exhausted this pretty thoroughly.
This is good.
You could have great returns on gold. Heck, if you'd have bought gold at $1,200 just a little bit ago, you're up like over 50%, and that's really good. But you're not up that much if you still hold it. You haven't recognized any of those wins. Enjoy it, leave it in your safe, watch it from a distance, have it as your little bit of reserve if everything does fall apart. But at the end of the day, it will take you setting aside a lot of money, having a disciplined investment strategy, and an awareness for you and your family about how much is enough. Anything, Cory, you want to send everybody off with today?
No, just if you've enjoyed this episode, gotten some value from it, share it with someone, because chances are someone else that you've talked to in the last week has some of these same thoughts. And that's why we're doing this. We know that we won't have the opportunity to sit down with every single person listening, but we can make a big impact for a lot of people. And if you do have questions, would like to have a chat with someone on our team, send an email to info@sfgway.com, and we can certainly help you do that. Or there's a link in the show notes to schedule a 15-minute conversation to get the conversation started.
Cool. And I just put that email address right in the chat. So if anybody needs it and wants to push on it, you got it right there for you. Everyone, Happy New Year. 2021 is going to be great. And I will say, I think that last year will give us new meaning to being able to say hindsight is 2020. And we hope this episode, like all of our episodes, has been a contribution to you being able to design and build a good life.